Hey guys, welcome back to the channel. My name is Max. My channel's name is The Cover Caller. I'm your #1 source for option strategy based high yield ETF research. That's all I do here. Today I'm happy to announce, speaking of option strategy, high yield ETF research, a fund we've been following quite a bit on this channel is from a company called Quantify. Now they just came out with a new product called their Income Stack product. All right, so they have two funds. They're in their income stack line, brand new line. It's ISSB and ISBG. Well, these guys announced their first dividend, or it was actually yesterday, but we're going to talk about that in a second, see what percentage it comes out to. We're also going to do a little quick mini review on the fund, see what the expense ratio is, and we're going to look at the option strategy. We're going to see how they make money. I'm going to tell you if they have unlimited upside or if they have capped upside. I'm going to give you my outlook on it and all that kind of stuff. So stick around. We're going to get right in the middle of it. Oh boy, these guys grow up so fast. I'll remember when these little income stack products were just a twinkle in their dad's eye. I don't know if you guys remember, but Retire on Dividends had a influencer special where he had a bunch of influencers and a bunch of managers on. I believe this special was back in late October, early November. I was on the special, and one of the fund managers was David from Quantify, and he was talking about this income stack product that was going to be, come out around Christmas. And I've been very excited about it ever since. And in fact, I had David on my show last week to coincide with when these funds came out. I think I had him on the day they came out. In fact, it was last. I believe it was last Friday, the day they came out. Anyway, they declared their first dividend today. Let's look at that. So it's 9 cents per share. So in 9 cents per share, right here, I did the math. You can see it right there. That comes to $4.68 annualized. And that comes to, and if you multiply that times 25, you get 18.72%. So that's a very rough estimate. So here are their positions. We're going to get in the middle of that in a second. All right. So, but first of all, what is an income stack product? Okay. So you guys might have heard of this one before. BTGD. Now this thing has been impressive. Let me show you a chart of BTGD. Well, there's a chart of BTGD. That's since inception. This fund has essentially doubled money for its investors in the year that it's been around. That's not an income fund. Like I say, it's a growth fund, and boy, has it been growing. You have exposure to Bitcoin, you have exposure to gold. Okay, the new product, same concept as this, very similar construction, full exposure to Bitcoin and gold, except, like I say, they're going to use option premium to make a little income. It looks like it's going to come out to around 18.2%. Okay, now here's the other great news. They aren't doing cover calls, and this isn't a plain Jane capped upside fund. Not that there's anything wrong with capped upside funds. Some funds that have capped upside are very steady and do a good job, but this is going to be one of these funds that's going to be on the more adventurous side. I predict this is going to behave more like BTGD does. Anyway, all right. So so how did they do this? Let's talk. Like I said, here's their position. So what they do is they're long Bitcoin and they're long SPY at the same time. Okay, but the way they do that, the way they get long Bitcoin is they buy a deep in the money option. See that IBIT? This doesn't. Let me try to zoom this in. I'm sorry about the. I'm sorry it's not zoomed in. Okay, IBIT. It goes out till next January, so it doesn't expire. It's a 45 strike call, so that's what's called a deep in the money option. That gives them pretty much about 95% of the upside of the market. Of Bitcoin. It just basically it's just like having Bitcoin. But then in addition to that, they sell a call. See that -81 call, and they sell a put and -12. Now, two things to notice here. They didn't sell near as many calls and puts as they have a long call. So the position is net long, which is good. We'll look at the graph in a second. Has uncapped upside. But these short options, the key to these short options, they both happen to be a 50 strike. So this is a short straddle. The key to notice is they expire 226, not 226 of 2027, or not 115 of 2027 like the long position does. They expire 226 of this year. Okay, so let's look at this position here. So this is the IBIT position. I loaded the trade in. So there's the 45 strike call, and there's the 50 put and the 50 call. In option strat, whenever it's below the line, it means a short option. Whenever it's above the price line, it means a long option. So that's their long. These are their shorts. You can see the profit and loss graph at expiration. If you use option strat a lot like I do, that's a very similar profit and loss graph to stock, which is just a straight 45-degree up line. They've tried to make a very a one-to-one, a pretty much one-to-one relationship with stock on the upside and on the downside. And that's what they've pretty much effectively done with this, except with the little option premium. So we'll keep an eye on those. So that's the Bitcoin side of the trade. Now remember, they also have a SPY side of the trade because they're long both of them. So here's the SPY side of the trade. And I know it looks a little different. On the SPY side of the trade, they have 40 long options. So they're long they're long through the 670 calls down here. Now up here they have a short. This is called a strangle because it's not at the same strike. At the same strike is a straddle. Remember, at sounds like straddle. Okay, strangle is split strikes. So anyway, this is a strangle. That's how I remember straddle. I don't know if that helps you guys. So the difference between straddle and strangle. In any event, but it's two short options at a split strike. Well, here's the deal though. They have 30 short calls and 3 short puts. So their shorts are 33, their longs are 40. They're still net long optionality, and they have more long options than they have short options. They have 10 more to be exact. So they do have uncapped upside, but not pure one-to-one upside. Anyway, they adjust these all the time. So I mean, they'll probably adjust this again by Monday. They move these ones around. Here's physically, if you want to know the math of it, here's the edge in this type of trading. All right, so I'm going back to Bitcoin for a second. Let's go back to the IBIT example. They have the 325 calls at 45, or yeah, okay. So look right there. See that theta? That is, what is that? Negative 0.01. Okay, so that means that this position loses a dollar. It's actually $1.45. See that negative 0.014? It means this position mathematically will lose $1.45 per contract in premium tomorrow. Okay, so that's the bleed. That's the bleed from that. The reason it's just $1.45 is because it's out till next January. It has plenty of time left. It's not bleeding too fast, right? It's not getting ready to bleed to death. However, your straddle here with the at the money sold call sold put is bleeding to death. Its theta is 1 on this one, 103 on this one, and 3 on this one. So the theta from its short options is 4. The theta from its long option is 1. So they're bringing in a little more theta than they're taking out. The difference in theta they're bringing in versus theta the long option is costing them over time is what creates their edge. It's not guaranteed, but that's kind of what you're looking for. Let's look at it on the SPY example. It may be easier on the SPY example. I think the math's easier. So on your long call, remember you own this and it has negative 10 thetas. This position will lose $10 a day. And this measures it over the next 24 hours. And this is in theory, mathematically. That's the bleed rate. All right. Well, so, and you own that. So you're minus 10 there. But remember, the theta on this is negative. Or I'm sorry, the theta on this is positive, 23. Okay. But it's not costing you 23 because you sold it. It's bringing you in $23 a day. And this one's bringing you in $22 a day. So you get like $45 worth of premium mathematically that should come in tomorrow from bleed versus this longer term option is going to cost you about $10. Now that's per contract, and you have a few more contracts here than you do there. But still, even when you put in the contracts, there's a difference in your favor, and that's the bleed that it's bleeding. That's the positive bleed that's bleeding in your account. So that's the theory of how they work. They own both of these at the same time. So what can go wrong? There's one thing that can go wrong. Both assets can go down at the same time. Neither of these funds, this option strategy right here has virtually no protection. Not that there's anything wrong with that, but it's not a collar strategy. Some of these funds have collar strategies and have other mechanisms in place. And if you're looking for that, this one may not be for you. So there's no protection on either asset. So what would be kind of a worst case scenario? Well, Friday be a pretty close to a worst case scenario because, Bitcoin was down. Bitcoin's down 10%. S&P was down about 1%. So the fund should be down 10, 11%, just like it was. So that's that's not great. And if you look at it looks like Bitcoin. It looks like this thing will probably open quite a bit lower on Monday based where Bitcoin is right now. Now, I haven't looked at gold futures, but gold futures don't trade over the weekend. At least in Chicago, they don't. They probably do somewhere, but I haven't looked into those. I hope gold futures aren't going down too. Maybe gold will rally, but Bitcoin looks like a rough open Monday. So, this one's going to be kind of rough going. So the other fund, and I'm not going to go into the trades on the other fund. It's the same thing, except it's BT. Okay, hang on. The other fund, this is the one we just looked at. There's BTGD. I told you we look at the expense ratio. There it is. It's 1.29. But I think there's a discount until March 31st of 2027. So it's only 1.14 until then. It's a lot of money. There's a lot of management in this fund. I'm not endorsing it or telling you to get it. But I'm just saying, so I want to make that clear. I do think this thing has potential as a tactic because of the unlimited upside, the exposure to Bitcoin and gold. The dangerous thing, like I say, is that it has exposure to Bitcoin and gold at the same time. So doesn't mean that a person could allocate to this, but I think a person might want to be very careful how he allocates to this. And this would be a good time to check with the planner, or get a professional opinion because of the extra risk in this. Of course, as you guys know, with extra risk comes extra reward. This ISSB may be the best performing fund of next year. I mean, who knows? Or ISBG, who knows? But we can't predict the future, of course. Okay, so that's the one we looked at the positions on, ISBG. The other one is ISSB. I actually bought this one in real life, and I have a small position on this, and we'll see how it goes. Now, this one is stacking stocks and Bitcoin together. So, and this one didn't have a great day the other day. It catches all the downside of stocks plus all the downside of Bitcoin. So, I mean, let's see how ISSB did yesterday. I'm glad these guys finally had a dividend. I've been wanting to do a review on this, but I just wanted to wait for their first dividend. The 18% is good news. I don't know. I think I heard did I hear somebody disappointed? Somebody called the dividend paltry or something in my Discord. Anyway, it may be paltry, but I think maybe paltry's, paltry has two sides to it. A lower dividend helps with the NAV capture, or it actually doesn't, but it doesn't impede the NAV capture as much as a high dividend. All right. So in any event, this thing was down big the other day too. It looks like it was down Thursday. Well, it was down 5.2 on Thursday. And then on Friday, it wasn't too bad because the market bounced into the close. On Friday, it was actually only down half a point. So, all right. So I'm also happy to announce I have a feature on my channel called the Diversified Divas, which is just a group of stocks I put together that I think they're the reason I call them divas. They kind of misbehave sometimes. But they're the most. I think the stocks that have, or the ETFs that have the highest potential, or really their option strategies that these ETFs use, in my opinion, have the highest potential and are kind of on the cutting edge of option income strategies. That, of course, is blocks and KILD. I know those are some of y'all's favorites also. Well, ISSB and ISBG have been added to the Divas. So we're going to start following every tick of them every day, just like we do blocks, or just like I do blocks, just like I do KILD, or just like I do QLDY, or the other Divas. And then also we have ones that we use for comparison. But I think ISSB, and I'm not endorsing them, but I do think that they merit following daily, because these, for traders, these could be a good tactic. I mean, just imagine if these would have been around after Liberation Day. I mean, could you imagine getting the Bitcoin and gold one after Liberation Day? I mean, but that's the good news is there'll be other Liberation Days. It won't be called Liberation Day, but there'll be other times the market pulls back, and then it finds a bottom. Everyone, and you get a chance to buy assets at a price you want. And when you do, I can tell you for darn sure, especially if I'm using a tactic. If I'm bullish on Bitcoin and gold or whatever, and looking for a way to get long, this is an easy button. Like I'm always saying, I like easy stuff. I mean, and this is the definition of easy. All right, so they both paid 9 cents. All right, I hope that is I hope that's good for you. They're coming out with some more income stack products soon. Keep an eye on my station. I'm always, covering stuff like that. Hopefully David will be back on the station. Oh, I'm going to put a link to David's interview. I was actually interviewed David and his buddy Zed Francis, who's from a different company, Convexitas. But these funds are, this income stack product is a joint project between those two guys. And they're both option bros, both smart guys. If you haven't seen that interview, go check it out. And I mean, they go a lot more in depth in this stuff than I did in this one. I just wanted to come on here and announce the dividend and touch base with you guys. And also, just FYI, there's only a handful of divas in the world right now. There's blocks, KILD, ULTY, ULTI, ISSB, ISBG, and QLDY. QLDY got upgraded to diva status, and WPay got downgraded. So now listen, I know ULTI and a lot of those other ones have been doing terrible lately. They're divas. I mean, they're divas. When they're bad, they're bad. When they're good, they're very good. Okay, so I'm not endorsing that you go by the divas. I just think the divas have the most forward-looking option strategy that will, given the right circumstances, dominate. We'll see, though. We shall see. I just think those 7 ETFs have the best potential for appreciation given the right circumstances. All right, guys. Now, remember, this is not financial advice. Check anything you hear on the internet from anyone with a licensed financial planner, especially big money allocation decisions like this. Your licensed planner knows your taxes. He knows your situation. He knows stuff I can't possibly know, or people on the internet can't possibly know. Use the internet for research, and then use a professional to actually execute. All right, guys, I appreciate it so much. I hope you have a great day. Don't forget you can like and subscribe. And also don't forget, if you'd like to support the channel, feel free to go to paypal.me/maxconvexity. Thank you so much and have a great day.